Welcome to the January San Joaquin Valley Economic Report. I'm reporting on economic conditions in the San Joaquin Valley for the month of December here in January of 2015. I am Ernie Goss, research faculty member here at the Craig School of Business at California State University in Fresno, in beautiful Fresno, California. And thank you for joining us today, and let me just tell you what came forth from our December survey. The overall index, which ranges between 0 and 100, 50 is growth neutral, anything above 50 is growth positive, below 50 is growth negative. It was above 50 for the 13th straight month. Of course, that's good news. The San Joaquin Valley economy continues to expand, has been expanding for quite some time now. Our index points to even more positive growth in the weeks and months ahead, next 3 to 6 months. The overall index, while it was down from November's record high of 59.9, is at 55.0. That's a pretty good number. That's a healthy number, a solid number, again, pointing to really good growth in the next 3 to 6 months for the four-county area, the San Joaquin Valley economic area that we have been doing surveys on for several years now. Again, the Craig School of Business here. And again, Ernie Goss, research faculty member, and the Craig School of Business. Now the job growth number was up. It strengthened, went to 54.5. That's a good number. Approximately 15% expect layoffs in 2015. Now that's down significantly. So only 15% of the businesses that we survey expect layoffs for 2015. Now when we ask about wage growth expectations for 2015, the average was about 2.4%. Now that doesn't sound that good, but that's up from 1.3% last year when we asked the same question. Now 2.4%, that is actually below what's been going on in the San Joaquin Valley. We're at 3.4% over the last year for the San Joaquin Valley. So 2.4% I'd say is on the low end. That's what they're expecting. Now here you'll see the index. I've graphed it here, and you'll see in red the San Joaquin Valley, and you see in blue the U.S. number. And both have been trending upward, pointing to very solid growth for the U.S. economy, very solid growth for the San Joaquin Valley economy. The inflation gauge was down from 62.1 last month, that's November, to 59.9 this month, that's December. And it's indicating only modest inflationary pressures. Now, why is that important? It gives the Fed some room to keep interest rates low. We're not seeing a lot of inflationary pressures out there, so that's good news. Approximately 1/3 of the businesses we survey expect zero or even negative changes in prices for the products they buy over the next 3 to 6 months. So that's even more indicative of not much inflationary pressures out there. So inflation is going to remain low, at least in this window we're looking at. And also, of course, that means the Fed's going to be keeping interest rates low. Now, looking at the unemployment rate for the four-county area, it's still too high, but it's down significantly from this time last year. In fact, it's its lowest level season adjusted since 2007. But unfortunately, it's about twice what the U.S. unemployment rate is. The economy's added about 9,000 jobs over the last year. That's very strong. I expect that growth, that rate of growth, to continue in the next 3 to 6 months. The average weekly earnings, as I said, up about 3.4% over the last year. That's very good news. The U.S. numbers are not nearly that strong, and most of the surveys that we do here are indicating not that strong a growth outside the San Joaquin Valley. Construction is still growing, but down from pre-recession levels. It'll take a while to dig back in or dig out of that hole that we created here in the valley. Manufacturing still not showing a lot of job growth there, even while we're seeing expansion in output. Wholesale trade and retail trade, one of the better two sectors, seeing some really good growth there. And I think when the numbers are reported for the holiday buying season, it's going to be one of the best since 2007. Now that's our report for the month of December. Here I am in January reporting. Now looking ahead, what should you keep an eye on? Keep an eye on the Case-Shiller Home Price Index, and I keep saying that. Look for the November index, which will be released the last Tuesday of January. Keep an eye on that one. It's been coming down And everybody says, well, that means more affordable housing. It also means price growth, less demand out there in housing. Keep an eye on that. Jobs added for December, those will come out on January the 9th. That's the second Friday this time in January from the Bureau of Labor Statistics. Look at the wage growth number in there. If it's above 2.5% year over year, that's important. That just puts the Fed on guard to raise rates. I don't think it's going to be quite that strong, but it is trending a little bit upward. Good news on the wage front, but not so good news on the interest rate front, as the Fed may raise rates as early as the first of the second quarter. In other words, we'll get through the first quarter with no rate hike. Second quarter, we may have a rate hike. Probably will have a rate hike in the second quarter. Now, what are the risk factors? Oil's just a big risk factor, and meaning if it moves higher. Take a look at the numbers, and you'll see a strange correlation in the U.S. economy, in that matter, the San Joaquin Valley economy. When oil prices move lower, the economy moves higher. And we've been seeing that. We will continue to see it. Now, it's not good news for all the nation, but it's good news certainly for the San Joaquin Valley. That depends heavily on agriculture. Agriculture depends heavily on low fuel prices, so that's good. Oil prices, rapid rise in interest rates, that's a real concern I have out there. One of the concerns that you need to keep an eye on. So watch that 10-year Treasury, yield, which will move up in advance of any rate hike. Keep an eye on that. Watch the U.S. dollar. If it strengthens, that's not good for the Valley in terms of export of agricultural products. I expect the dollar gain's been about 13% over this last year. I don't think it's going to be that strong in the weeks and months ahead, but it's still going to be strong. And finally, farm income. Keep an eye on that number, which has been not as good as we'd like to see. And of course, farm income is very important for the San Joaquin Valley. Well, folks, that's it. It was a good report. Looking ahead the next 3 to 6 months, I'm saying positive for the San Joaquin Valley. I'm Ernie Goss, research faculty member with the Craig School of Business at Cal State Fresno. Until we meet again that first business day of February, may your economic cup runneth over, and thank you.